Hi friends, Simon here from InformedTrades.com. On the screen right now, you're seeing the daily chart of the S&P 500, and we are back in the price channel that goes back to August of 2011. So just to give it a proper context, let's switch to the weekly chart. You can see the channel starts back here, August 29, let's call it. You might even extend it a little further. You could say at the beginning of August. August 2011, weekly chart, channel starts. And we stay in the channel, we sort of have one low out that dips below the channel, but quickly comes back up. We also had one down here. So basically, we're in the channel. Anytime the price actually comes below the channel, it sets off a pretty big rally, right? So we've gone from bottom of the channel to top of the channel, once here. Here, we didn't quite make it to the top. Here, we get almost to the top here. And then, of course, this one right here is probably the best one. In October of 2014, hit the bottom of the channel, and then we definitely touched the top right here. But what was interesting, in August of 2015, we broke through the channel with great strength. You can see, I'm actually going to zoom in a little bit. You can see we broke through this channel with great strength. And that was a big move. In light of that move, I closed out a bunch of positions. However, I kept most of my positions still on. I kept the value stocks I thought were value stocks in my portfolio. However, something that I thought was a growth stock, I either took profits or I cut my losses on them. I pared down my positions because that, as a way of playing it safe. However, I still maintain the view that stocks would probably head higher in light of what's going on with the bond market, in light of central banking activity. Now we are back in that channel, so we're back above the 50-week simple moving average, and we're in this price channel, which I think gives some clearance for those who want to put their long positions back on. I still think that stock valuations are pretty rich, so I'll be looking at value stocks, from here on out, basically. There might be some growth stocks that I'll be interested in, depending on but I'll take on a case-by-case basis, depending on what's going on. Of course, waiting for pullbacks in those stocks' price action. So I think that's pretty notable that we're back in this channel. That's sort of the major point of all this. I think it gives bulls a lot more credence. Okay, so related to the activity on the S&P 500, the dollar. This is the FXCM dollar index that we're seeing, the dollar equally weighted against a number of other currencies. We're seeing, and we talked about this before, over the past few days, we're basically at the top of this trend line here, right? You see this dotted blue line. That's a bearish sign, so I would expect the dollar to decline. If we look at the futures dollar index, similar pattern here. You might actually even call this a horizontal resistance level. Right here, based on what happened, price action we saw here in May of 2015, again in July of 2015, and again in August of 2015. All these price points, we see price touch here and then reverse. Rally that level and reverse. We have also rallied this level and are now reversing. We also have a pattern of lower highs in place. So the dollar index, I think, is also showing some signs of dollar weakness. Now, dollar weakness could result in equities going higher, which I think also strengthens the case for ongoing strength in the S&P 500. At least until we get to, assuming we do get to, if you believe that we're going to get to, let's say, the bottom trend line here, or we might get to here, for instance. If we can make it to this level on the FXCM dollar index, stocks may rise during that time. That's one way of looking at it. Another way of looking at it, if we believe that the U.S. dollar is going to continue declining, that tends to be or could be bearish for U.S. equities. It could also be bearish for gold. This, I think, is a really good opportunity to buy gold. We are at the 50 daily moving average. We're at the support level that was established or re-established here in March of 2015, also here in November of 2014. So pretty good time to buy, in my opinion, for gold. We are still in a pattern of lower highs, so we're also in this downward channel. That's the one reason where, I think it might be easier if you zoom out. Actually, let's go to the weekly. Probably easier to see it there. So you could still argue that, it's still a little premature to buy because we have this downward channel going on. The bullish argument is that we're at support. We see dollar weakness. We are also, the 50 moving average is sloping upwards, and we're right at it. So you could view it either way. From a long-term perspective, and you can see this on the weekly chart. I do like to. I mentioned this a bunch of times, but from a long-term perspective, I think we're going to go past here. So it's still a good time to buy, in my opinion. If you maintain that view that we're going to break the 2011 highs, and this is a pretty interesting time to buy regardless. But I think it's especially interesting and potentially interesting even for short-term traders in light of being at that support level. The dollar yuan, well, let's go back to the daily chart here. Big move here. So we were in a downward price channel. We talked about this. We talked about this break out of it and how it could set off a short opportunity. It did. Depending on, this trade could have worked well, but one thing that surprised me about it was, let me zoom in. So, we broke out of the channel, or we touched the channel here, and I would have argued that that's a good entry point. Depending on where you put your stop, you may have gotten stopped out. However, the original directional call move did, occur. It did go down. We are back in this channel. We might go all the way to the 200 exponential moving average, right around 630, or maybe between 629, 629.50, maybe right around here, 629.26. Somewhere around there, I think, would be a reasonable target in the short term. That's about it. Like I mentioned, dollar weakness, S&P 500 strength, I think, are major themes, and you can extrapolate that. Look for trading opportunities with that sort of as a background contextual piece of information. Any questions you have, anything you want to add, join us at informedtrades.com. If you enjoyed this video, please like it on YouTube, share it on Facebook, Google+. That helps us grow and helps us make more videos. Best of luck in your trading and investing, and we'll see you next time. Take care.